Some landlords in Vancouver, they saw this coming. Others hoped that the market would bounce back, but now reality is setting in and it's hitting harder than expected. They bought back at the peak, mortgages ballooned, rents stopped rising, and now, they're sitting on cash negative properties that they can't sell, they can't refinance, and in some cases, they can't even rent out at break-even rates. Now, if you're holding on to real estate in today's market or even thinking about it, what's happening right now should make you pause, because this isn't just a temporary dip, it's a structural shift. And if you don't adjust your strategy soon, you could get caught holding the entire bag. And by the way, one of the biggest mistakes that sellers are making right now isn't even about price. And I'm going to show you exactly what that is. In this video, I'm going to walk you through what's really happening beneath the surface in Vancouver's real estate market and why so many sellers are feeling stuck. You'll see why waiting for a rebound could be riskier than most people realize, how current price drops are impacting equity, and one overlooked decision that's quietly derailing a lot of sales. And by the end of this video, you're going to have a much clearer picture of how to protect yourself, how to protect your property, and your financial future in a shifting market. So let's start off with the mindset that I'm hearing from a lot of sellers right now. And to be honest, it's quietly derailing a lot of smart decisions. And it usually goes something like this, right? People are saying, I'm not in a rush. I'm just going to wait until prices go back up. And on the surface, I get it, right? That sounds perfectly reasonable. There's no panic, no pressure, just wait it out. But here's the issue. The idea that prices are going to bounce back to those 2021 levels in the next year or two, that's not just optimistic. It's wishful thinking. And I'm not saying that to be dramatic either. I'm saying that because the data backs it up. In a June 2025 poll, housing economists, they projected Canadian home prices would decline. They're going to decline another 2% over the next 12 months. And then they'll remain relatively flat through 2026. So no sharp V-shaped recovery, no magic rebounds, right? Now, meanwhile, RBC, their market outlook points to a 7.9% increase in resales next year. But that's sales, right? Not price. And as of now, Greater Vancouver's home prices, they are still down nearly 9% from where they were at the peak in 2022. That means if you're banking on a recovery to those pandemic highs, you could be waiting 5, 6, maybe even 7 years if it happens at all. But let's say you do wait, right? What does all of that cost to you? Well, for starters, there's the monthly holding cost. So things like your property taxes, your insurance, and the maintenance, those things do not go away. And then there's your mortgage interest, which in many cases is now locked in at a much higher rate than what you might have had before. And then on top of that, your money is tied up, which means you're going to be missing out on other opportunities. And then, of course, let's not forget the stress. And that is a big one. Living in limbo and wondering what the market's going to do, second guessing whether, you should have sold earlier, that kind of uncertainty, it can really wear you down very quickly. And sometimes then the smartest financial move isn't holding out for a specific number. It's knowing when to pivot and take control of your next step. And this is especially true for anyone who bought a property in the last few years as an investment, because here's what's happening. And we're seeing this across the board. Rental returns, they've flattened, right? Expenses, they've climbed. Mortgage renewals, they've caught people off guard. And now more investors than ever, they are realizing that their so-called investment is actually bleeding money. You see, many people, they bought pre-construction condos between 2019 and 2022. Now you fast forward to 2024 and 2025, and those units, they're now completing. And buyers, they're either, one, trying to assign the unit and they're realizing that the market won't support the price that they paid, or two, they're closing on that unit and they're trying to rent it out, only to find out that their rent does not cover their mortgage. And, in some cases, landlords are losing, and they're losing like $700 to $1,500 a month or even more. And that's with a tenant in place. Guys, strata fees are up, property taxes are up, insurance costs, they're up also. This is not a short-term squeeze. It's a full-on math problem. And most sellers, they don't have a calculator that includes the stress, the uncertainty, and of course, the delayed life plans. Now, here's where things can really start to get tricky. And it's something that a lot of people, they don't think about until it's too late. So if your plan is to rent out your place while you wait for the market to bounce back, you could be walking straight into a whole new set of challenges. You see, in BC, once you've got a tenant in place, your flexibility as a seller, it drops dramatically. So get this, you can't even issue a notice to end tenancy unless the property is sold and all subjects have been completely removed. Okay, so in other words, you don't get to start that process until the deal is already firm. And even then, there is no guarantee that the tenant will actually move out on time. And plenty of sellers, they end up offering cash, sometimes to the tune of thousands of dollars, just to avoid blowing up their closing date. And then on top of that, showings become a real headache, right? Because as a landlord, you're required to give your tenant at least 24 hours notice. And that alone, it's going to limit how easily buyers can see your place. And here's the kicker. A lot of buyers, they don't even want to bother with a tenant-occupied listing. Not at all. I mean, think about it. Why would they? When they're worried that the tenant might not even leave by possession. And there are also plenty of other vacant homes that they can go choose from. And so, as you can see, it creates this sort of uncomfortable middle ground where you're technically holding onto the asset, but it's tying your hands from actually doing anything with it. Now, you might be thinking, okay, Glenn, but eventually the right buyer is going to come along. And that's true. Maybe they will. But here's the issue. Buyers today, they are not the same buyers as what we had back in 2021. Today, they're cautious, they're well-informed, and in many cases, they're financially strained as well. And because the number of listings have climbed in so many areas, buyers, they now have choices. And when buyers have choices, they start ruling things out very quickly. Tenant-occupied properties, pass, right? Needs work, pass. Slightly overpriced, pass, right? Even if your property is decent, if it's not staged, if it's not priced right, if it's not marketed well and easily available to view, it's just not going to stand out. And that's the reality of this kind of market. And here's where psychology comes in, right? I mean, we all remember what our neighbors sold for a few years back. We remember those crazy bidding wars, the no subject offers, the insane price jumps. But those memories, they can really trap us because the market that created those prices, that frenzy, it does not exist anymore. Today, we have a more informed buyer pool, stricter lending, and overall fatigue from so much uncertainty. And so when you hold on to a number based on what someone else got 2 years ago, that's not optimism, right? That is wishful thinking. And it's what leads sellers to overprice, sit on the market, chase it down, and eventually sell for less than what they could have if they had acted earlier with the right strategy. But here's the part that most sellers don't actually calculate, and that is what waiting really costs in dollars and cents. Because on the surface, it feels like you're saving money by holding off, right? But in reality, it adds up very fast. And this might be the most overlooked part of the entire conversation. So let's say that you've got an $800,000 condo and your plan is to wait 2 years, hoping that price is going to go up by, say, $50,000. That sounds reasonable, right? But here's what that actually looks like in the meantime. So over those 2 years, you're likely going to spend around $20,000 in mortgage interest, and then add another $5,000 in property tax, and then factor in $10,000 to $12,000 in insurance, utilities, and maintenance. And, just to keep that place running. So that's close to $40,000 in carrying costs. And that doesn't even include the stress and uncertainty of sitting in limbo for 24 months straight. So on paper, you're chasing a gain, but in reality, you're slowly eroding your equity month after month after month. So what if instead of waiting, you just made the move now, freed up your equity, and gave yourself some financial breathing room to focus in on what is next, right? Because sometimes it's not about timing the market perfectly, right? It's about recognizing when you're stuck in a trap and choosing to step out of it. Listen, if you think that selling your home in this market is just about dropping your price a little or, timing it just right, think again, because there are 3 things that can quietly sabotage your sale, even if the price is right. And most sellers, they don't find this out until months have gone by and they've lost all their momentum. So make sure you watch this next video popping up right now. It could save you time, it could save you stress, and tens of thousands of dollars. And of course, if you have any questions, want to chat more about any of what we've talked about today, feel free to reach out. There is a link in the description box below. Otherwise, I will see you in the next video.